It is possible, guys, to double your money with the correct decision. Listen, welcome to the Independent Investor Channel. My name is Ryan. We run a scenario through the Trading Academy, which is one of my favorite websites, which allows us to take a compounding calculator and add the function of what the effective fees would be. So I take you guys to the Trading Academy website here just for example's sake. This is what it looks like. The link is in the description of all my videos. But at the starting amount, we're going to start with $1,000. That's our initial starting amount. And then the number of years we're going to change to 40, okay? A 40-year investment cycle. Additional contributions is going to be $400 per month for example's sake, okay, guys? And then we're going to drop down and do the compare annual fees, all right? We're going to do a rate of return at 7%. We're going to leave the first column at 0% interest. That's going to be your self-directed account. We're going to leave the next column at 1%, and then we're going to change the last one to 3%, which is the industry standard, okay, for example's sake. We're going to go up and hit calculate, and that's going to bring you to this page, which is going to compare the three columns. And when you look closely at these columns here, this is where it's really going to be an eye-opener for a lot of people if you've never seen this before. All right, guys? And like we said before, we're looking at the number of years here, which is consistent amongst the three columns at 40 years, okay? And then you kind of drop down and look at the comparison. The contributed level is going to be the same in all three categories at $193,000. But when you look at the difference between the fee structure in column 3 at less than $500,000, and then you compare it in fee 1, which is 0 fees, you've got over $1 million, guys. That is over double the value in that account by just removing the 3% fee in the account. The difference in the two accounts in this particular example is going to be $500,000, over double what you could get in a managed account. The self-directed account will render over $1 million of accumulated value over the 40-year investment time horizon. Choose to either go into a self-directed account or go into a managed account. If you made one particular decision, guys, in your investing career, the most important decision that you can make is to choose the right account to put your money into and allow those dollars to grow. Guys, I hope this has opened your eyes to the power of compounding interest. But understanding compounding interest is only half of the equation. If you understand compounding interest, but you also understand the effective fees that fees are going to have over that compounding effect, guys, the information is invaluable, and in this particular scenario, it can mean that your accounts have grown to over double what you could have in a traditional managed account. Guys, thank you so much for tuning in to double your money in 5 minutes or less. It only takes one decision to impact your future dollars. If this is the first time that you're tuning in to the Independent Investor Channel, subscribe to the channel. That way you'll be notified of any future videos that I put on YouTube. Share this link with anybody out there that you know that can benefit from the information. Guys, thank you so much for tuning in, and good luck in your investment future.